Guys, welcome to my channel. Thanks for subscribing to my channel. I just want to speak to you about this today's FII and DII activity. FII cash is about 1,145 crores and DII cash is 486 crores. So FII cash they have short they are going to short or they have shorted the market, and the future index also is in negative about 2,100 crores, 2,200 crores. So this is how we look at little bit to get an idea as to how the market will go before trading. I just wanted to show you one more thing. This is the SGX Nifty. So SGX Nifty, if you check this SGX as Singapore Exchange Limited, uh, morning you will have a good idea as to whether the market will be up or down. Still, you can decide whether the by knowing this you can decide whether the market will be up or down. Okay, so you need to have certain things like certain ideas as to how the market will uh, how the market will work for the day. Okay, this in the morning this was about this went to about it was working in around about at 120 or something. Now it's coming down. So usually what I'm suggesting is that never trade in the morning, because if you want to earn some good amount of money, try to trade later in the afternoon, right at this time. Okay, so suppose for example I'll just check this one sec. Okay, I'll just show you this calculator. Suppose if you had bought that option at in the morning at about say 120. Okay, 120 into 25, one lot is 25, and suppose you brought four lots. Okay, so it comes to about, okay, one sec, into 4, so it comes to about 12,000. Okay, so 12,000, but if you buy it now, so suppose if the price is 60. Okay, so it is about 60 into 25 into 4, so 60 into 25 into, sorry, okay, 60 into 25 into 4, so it will come to 6,000, so it's half the rate. Okay, it's almost half the rate. So what you need to do is you need to wait till the afternoon, wait for the price to decay a little bit, and after the decay you just buy it. Okay, 6,000 or something. Okay, but just before buying also just check the market. If the market you're expecting the market to pick up or the market to go down further, you just need to check that. Okay, so because in a day the price can go down as much as say say if I tell you the right this one sec, I'll just show you. Okay, this was the high of this. Okay, okay, 1 minute. Okay, the high of this was about 144. Okay, 144. If you take 90 of 144, 90% of 144 is how much? Okay, 144 into 90, so it's about 14. It can go down to 14 rupees. Okay, 14 rupees if the market is really negative, and if the market is down by say very good number of points, it can go to by 90% of the high. Okay, 90% of the high, or it can go to about max to max, it can go to about one sec, max to max it can go to about 80% of the previous close. Okay, 80% of the previous close, 70 to 80% of the previous close. So 70 this previous close I just see. Okay, this is a previous close 93.25. 93, if you see the check the previous close, previous ones. Okay, just try to erase that. uh, So 93.25, 93.25 is the previous close. So it can go down to 70% of that. Okay, 70% of that. So you need to be very careful when you're doing trading. If you're doing scalping, it's not a problem. But if you're doing a trading, if you want to wait for a longer time, I would suggest that don't do that. What you do is wait for the price to decay and wait, maybe put that money in the end of say after 315, and try to wait for a good opening next day. But I would not suggest that for put. Try to do it for call. If the call is going down, by say 70 or 80%, try to do it for call. Don't do it for put. Okay, put usually most of the time put in the morning put doesn't pick up. Usually it is a call. Okay, so put usually doesn't pick up. So try to use call at the end of the day for. So I just show you. So call, I have one call here, I think. Okay, I've got a call here, the 60. So the high of this was today was 109. Okay, I'll just show you this, the high. Okay, the high was 109, 110. Okay, so 110 of, so 110. Now it is at working at 60. So 60. So we'll just remove the percentage of this. Okay, we just remove the percentage of this. Okay, 110 of 60, so 60% is into zero point 0.4 will do, so it's 44 rupees. Okay, so if you had bought this at 110 into 25, say you had bought about two lots. Okay, we'll take four lots, it's 11,000. Okay, 110. Now it is at, now this is at 60. Okay, 60, say 60. So we'll just 60 into 25 into 4, 60 into 25 into 4, so it's about 6,000. So it's a vast difference, 5,000 difference by trading in the afternoon. So morning it was 110, now it is at 60. Okay, so you need to wait for the price to come down, a little bit, then you try to trade. Okay, that also I would suggest that don't trade at this point. Even during this time, the market is mostly sideways. Try to trade in, maybe if you just want to scalp for the day, you just try to do it in the end of the day, or try to do it before, just before 10. If you're doing a call trade, do it before 10. Okay, and if you're doing a put trade, try to do it after 10:30. Put trade usually works after 10:30. Put trade, you can do a put trade. Okay, so you can just a rough idea I'm giving you about how the trade works and all. It's not like 100% will work in this way. It's not like that. But yeah, I'm just giving you a rough idea, like what needs to be followed, or what things you need to follow. What are the parameters you can follow, just to have a idea actually, so that you would not lose money. Second thing is that if you're more into over trading, or if your mind goes into such a thing, like you tend to overtrade, if you're scalping, if you're doing more of scalping, or if so, what happens is, usually why do people overtrade is, I'll tell you. Usually what happens in stock market is, when people lose money, even if they lose, say 1,000 rupees, they lose 1,000 rupees, they feel hurt, they feel dejected. Okay, so they try to recover that money the same time. Okay, you can recover the money next day, or day after that, but the stock market thing becomes like a game. Okay, it doesn't become like an earning money, it becomes like a game. So what happens is, people try to invest that time and try to get out of that feeling, and try. So what happens, in the bargain they lose more money. Okay, so what I would suggest is that, uh, if you are more into over trading, or if you have a habit of over trading, try to, what you need to do is, you need to discipline yourself. You need to come out of over trading by selecting your trades, being very selective. Maybe wait for 2 days or 3 days or 4 days, like that. Okay, and I would suggest that, try to use more of risk management if you're into over trading. Okay, if you're into scalping, or if you're looking for trades here and there, every opportunity you want to grab, every opportunity. So if you have that kind of mindset, I would suggest that you need to come out of that. I need to try to do risk management. So suppose, for example, you have 1,000 rupees. No, if you have, say, 1 lakh rupees. So what you do is, you can just invest. Try to invest. You need to pick up. You need to do little fundamental analysis, or study a little bit. Okay, and try to see the days when the market could give a very big increase. Okay, so, like, for example, Russian-Ukraine war. So Russian-Ukraine war was a time, like, there was a time when market could give very big increase. So that is a very good opportunity, that you can use that time when market could short, or market could come down drastically by, say, 1,500 or 2,000 points. Okay, so such kind of situations, or RBI declares something, or something, you need to keep a track of the news. Okay, and in that kind of situation, suppose you have 1 lakh, and in that you invest about, say, 5,000 or something. 5,000 you just invested. Okay, you just invest 5,000, you should be able to get, say, 20 times out of that, 20 times out of that, or 10 times out of that, like that. Okay, so that is how you work. Okay, you need to be very careful, because if you're you need to work with the capital what you have, so you need to work very wisely and very carefully. Okay, there are chances people lose capital is because what happens is, they tend to trade more than their capacity. Meaning, Suppose for example, if they have 2 lakhs or 3 lakhs, they try to trade with 1 lakh. 1 lakh is 33% of their income, so that is not good. Okay, so you need to trade with less amount of money. You need to trade with 20,000 or 10,000. You should not trade with big amounts. Okay, you need to be very careful. So this is something I spoke about, price decay on the calculator. I spoke to you about price decay. The second thing, you need to like check this SGX index in the morning. You can check this SGX index in the morning. You can check this. Then you can check the. You need to keep a track of this score. Okay, this is the score 17,500. Okay, it's going at 17,500, or the market right now is sideways. So 17,500 is going something like a 17,500. Okay, then you can go to this 37,500. Okay, 37,500. So this is how you can just keep a track, rough track. You need to know, like, if the market goes down by, say, whether the market would go up by 100 points or market can go down by 100 points. Okay, you need to keep a track. Little bit of integers you should know. Like, so for example, this is like uh, uh, this is going up, market is going up, so it will, so if it goes in green, okay, if market will go in green or market will go in red further. Okay, so market will go to minus 200 points, or market will go to say minus 24, or minus or 0, or it would go to 20 or 30 points up. Okay, so like that. So you need to keep a track of the bank nifty index and nifty index. Okay, and you need to keep a track, and you need to be patient. And patience would be when, like, for example, when I've seen in my own trading, I've been patient when I've used less amount of money, and I've been very relaxed and very much at ease. Okay, when I've used very less amount of money, so you can try that. You can practice that, on trial basis. Like, you lose very less amount of money, try to trade during expiry date, and see how you relaxed you'll feel. You'll feel very relaxed. And try to use the same principle, when you do some big trades. Suppose you become rich and you have about 10 crores in your bank, and you just do trading with, say, 50,000, or you do trading with, say, 1 lakh, and try to find an opportunity. You would be at ease even with that big amount of money. Okay, you'd be at ease, very ease. You don't have to take a lot of risk or calculated risk or any kind of risk. You just have to be at ease. Whatever trading you do, just be at ease. Okay, and try to be at ease when you're doing trading. You don't have to take any risk. You don't have to worry about the market. You don't have to worry about anything. To work on your risk management, try to use very less amount of 0.1% or 0.5%, like that. Okay, that amount of money. Okay, if you're like, say, so don't take big risk. 30% of a capital, don't use 30% of capital, or 10% of a capital. Just try to use 1% capital, where, suppose you can easily afford to buy a mobile phone, iPhone, and you are very happy with it, or you're not worried about your money or something. You can trade with 1 lakh, like that. If you're more of a phone, at a range of, say, 10,000 or 20,000, and you can just buy it off, and don't not worry about it. You can buy that phone, 20,000 phone. So you can work that out, like, that way. You need to, whenever you trade, you need to be at ease, and for that to be at ease, you need to use less amount of money. Try to use less amount of money. Try to use less amount of risk. Okay, so that you'll be ease at night when you eat your dinner, or when you eat, suppose you're grabbing a lunch. You should be at ease every time. Okay, you should not feel, oh, I put that money there, what will happen. You don't have to feel that. So there are three things what we have studied today, what we have learned today is, to look at this SGX index. Okay, SGX index. Then you need to look at that FII and DII score, whatever that chart. Then you can look at open interest chart, which is available in Google. You can do that. You can look, if suppose you want to check the support and resistance, you can use the pivot point indicator. You can use that. You don't have to worry about anything. Or, okay, whenever you're in a stock market, you need to be at ease. Okay, whenever you're doing a trading, don't try to trade anytime. If you're having fear, or if you're low in confidence, or if you're worried, don't try to take trades. Okay, if whatever is the capacity where you don't feel the fear, use that kind of trading. Okay, so you don't have to worry about anything. Okay, and I would also suggest that don't borrow money. I've recently very good person has given example how he borrowed money and made money. The reason why he borrowed money is because he's got very good backing and very good support. Okay, so if you have a very good backing or very good support, if you've saved money for a long time, and if you're borrowing money, that's another thing. Okay, but don't borrow money uh, if you don't have capital, or if you don't do trading on borrowed money. Okay, try to work something out, try to get something passive income or something going, by that you take that, so you can, your risk could be minimum whenever you're trading. Your risk should be minimum. Okay, and suppose you're not working anywhere or something like that, you need to maybe find a small job, and then you can might as well learn, as time goes by. You can learn, you got a lot of time, ample of time, you can learn that. So this is certain things, in stock market, like, very important thing is what I've shared is today, is to try to be at ease and try to use time decay if you can, and try to use whatever times, little bit of time factor and all these things. I would not guarantee that all these factors, after all these factors, you could make money, but your chances of making money would grow, by looking at all these factors. So only one thing you need to do is, in stock market, is you need to work on your risk management. This is the only thing what you need to do. That there is nothing else in the stock market. You need to just use less amount of capital, less amount of risk, and try to gain more money. So if suppose your risk is 10,000 rupees, your gain should be at least 2 lakh rupees, like that. Okay, so you need to look for opportunities and all. If you feel that there's something going to happen, and try to use that opportunity. Okay, so all these things, try to use that, and you will be a good success. Okay, you'll be a good success, and this stock marketing will not be difficult for you. Okay, I'll just end this video right now, and thanks for subscribing to my channel, and I hope you have a good day. Yeah, have a nice day. Bye.